Good afternoon, everybody. Warren Allen is my name, Chief Executive of the External Reporting Board. It's my pleasure this afternoon to welcome you to this update webinar. Also, I don't need to remind you that currently there is significant activity and discussion in the audit and assurance space, both internationally and also here in New Zealand. Unfortunately, not all of this activity and discussion is positive. And we are seeing internationally and in New Zealand a lot of media and government focus on audit quality in particular. So I think it's fair to say that it's very challenging times for auditors. And we here at the XRB and the New Zealand Auditing and Assurance Standards Board are wanting to do everything in our powers to make sure that we communicate with you and keep you up to date with our activities. The international boards which we work closely with, that's the Ethics Board and the Auditing and Assurance Standards Board internationally, are responding to this focus internationally, and that is driving a lot of our work here. So this webinar today is very timely. I wish to thank you for your time and your participation in this important update. And now I'll leave you in the very capable hands of our assurance team of Misha, Sharon, and Payman. And I understand that I will hand you over now to Sharon. So thanks again and enjoy this webinar. Bye for now.
Thank you, Warren. Good afternoon, everyone, and welcome. I'm Sharon Walker, Senior Project Manager with the XRB. Misha, do you want to move to the next slide, please? We have a very full agenda for the webinar today. As you can see, we'll be looking at the revised and restructured Code of Ethics, Auditor Reporting, Service Performance Information, Accounting Estimates, Risk Assessment, Quality Management, and audits of less complex entities, or as we refer to them, LCEs. If you do have any questions during the presentation, please send those through to us and we will do our best to answer them at the end. Next slide, please. Okay, on this slide, you'll see that some of the topics we are talking about are effective already. That's auditor reporting and the Code of Ethics. Some of the topics have been finalised but are not yet effective. We've got service performance information and accounting estimates, which become effective shortly. And then we're also looking at some of the projects that are works in progress, including changes to the Code of Ethics, the updating of our interim review report standard, NZSRE 2410, risk assessment, quality management, and less complex entities. Next slide, please. Okay, so the Code of Ethics, the Revised and Restructured Code, Professional and Ethical Standard 1, Parts 1 and 3 of that code are effective now. Parts 4A and 4B, which are the independent standards, are effective for periods beginning on or after 15 June 2019, and early adoption is permitted. The Revised and Restructured Code is based on the ISBA's Revised and Restructured International Code of Ethics for Professional Accountants. Next slide, please. A key change in the code is its new design, making it easier to navigate, use, and enforce. The code has been completely rewritten to make it easier to understand. Requirements are clearly distinguished from application material, and if you've looked at the new code recently, you'll see that all requirements have the letter R in their paragraph reference. There are also a number of substantive revisions to the code. These include revisions to the conceptual framework, safeguards, NOCLAR, which is non-compliance with laws and regulations, long association, and inducements. The conceptual framework explains how all assurance practitioners are required to apply the code in order to comply with the fundamental principles and, where applicable, be independent. The conceptual framework underpins the code. It is a set of dedicated provisions that apply to all assurance practitioners in all circumstances when dealing with ethics and independence issues. A conceptual framework is important as it is impossible to establish an exhaustive list of facts and circumstances that the assurance practitioner might face. The enhanced conceptual framework provides clearer and more robust safeguards that are more tightly integrated into the relevant sections of the code. The conceptual framework makes it clear that identified threats that are not at an acceptable level must be dealt with in one of three ways: either eliminating the circumstances creating the threat, applying safeguards to reduce the threat to an acceptable level, or declining or ending the engagement. If the threat cannot be eliminated or reduced to an acceptable level, the code is very clear that the assurance practitioner must decline or end the engagement. The conceptual framework has a new requirement for the assurance practitioner to stand back and think about whether the overall conclusion made or actions taken are appropriate to resolve the ethics issue. This is the reasonable and informed third-party test. The reasonable and informed third-party test involves consideration by the assurance practitioner about whether the same conclusions would likely be reached by another party. The enhanced conceptual framework more prominently features the requirement for the assurance practitioner to be alert for new information or changes to facts and circumstances in applying the conceptual framework. It also emphasises that assurance practitioners are required to exercise professional judgment and use the reasonable and informed third-party test in all three stages of applying the conceptual framework. That's in identifying, evaluating, and addressing the threats. The conceptual framework includes a more robust definition of safeguards, which is actions, either individually or in combination, that an assurance practitioner takes that effectively reduce threats to compliance with the fundamental principles to an acceptable level. It is no longer a valid notion that all threats can be addressed by applying safeguards. The enhanced conceptual framework clarifies that in certain circumstances, the assurance practitioner may not have any option but to decline or end the engagement. Also important to note is that conditions, policies, and procedures that are established by the profession, legislation, regulation, or the firm to enhance the assurance practitioner acting ethically are not safeguards because they are not specifically designed to deal with the particular threat. Looking now at NOCLAR, revisions to the provisions on non-compliance with laws of regulations were approved by the NZAU ASB in 2016. So they've actually been in effect for a little while now. In finalising the revised and restructured PES1, so that's the new code that we issued recently, the board made some changes to the application of these provisions in New Zealand related to other assurance engagements. The provisions about what and with whom to communicate NOCLAR for other assurance engagements are now less prescriptive than for an audit or review engagement. And this is to better reflect the varying nature of other assurance engagements and brings PES1 into line with the International Code. Revisions to the long association provisions were approved by the board early last year, and they became effective for periods beginning on or after 15 December 2018. Like NOCLAR, these were approved under the old drafting conventions, and so they have been rewritten in line with the ISBA's new drafting conventions in the revised code. There has been some change in the application in New Zealand related to other assurance engagements. For other assurance engagements, the board has removed the strict time on, time off provisions relating to public interest entities. Remember, this is only for other assurance engagements. And this means that in considering the familiarity threat from long association with an assurance client, the assurance practitioner applies the conceptual framework to identify, evaluate, and address the threats. And again, this is bringing PES1 into line with the International Code. Finally, inducements. The revised inducements provisions clarify the meaning of inducements and introduce a more robust and comprehensive framework which clearly delineates the boundaries of acceptable inducements and guides the behaviour of the assurance practitioner in all situations involving inducements. The core of this framework is a new intent test that prohibits the offering or accepting of inducements where there is an actual or perceived threat to improperly influence the behaviour of the recipient or another individual. Next slide, please. So if we take a quick look at what's coming up, the ISBA has recently issued an exposure draft on the role and mindset expected of professional accountants. Among other things, the proposals strengthen the code by requiring professional accountants to have an inquiring mind when applying the conceptual framework and highlight the importance of being aware of bias and having the right organisational culture. This exposure draft is currently open for comment. The ISBA is also looking at non-assurance services and fees and the impact that the provision of non-assurance fees or related, the impact that the provision of non-assurance services or fee-related matters have on independence. And we can expect to see an exposure draft on non-assurance services in the next month or so. Next slide, please. And Misha, this is over to you.
Thanks, Sharon. So the next topic on our agenda is on auditor reporting. The revised auditor's report has been in effect since December 2016. Most significantly, the biggest change is the reporting of key audit matters. And that is really the reporting of the matters that were of most significance in the audit of the financial statements in the current period. So auditors have been required to report CAMs for listed entities since December 2016. And then in the second wave of mandatory reporting have been required to report CAMs for other FMC reporting entities considered to have a higher level of public accountability from December 2018. So that's quite a mouthful, that terminology. What that's really capturing is registered banks, insurance companies, credit unions, etc. So all those sort of higher public accountability entities. The other new developments that were caught within the auditor reporting project was really a reordering of the report so that the most important part, the audit opinion, is the first thing that the reader reads. There's also more information on the responsibilities for going concern, a new other information section to clarify what the auditor has done related to other information included, for example, in an annual report. And there's also now the ability to reference to the more extended auditor responsibilities to the XRB website. Hi, I believe we've had some sound trouble. Can you hear me now? Okay, I think that's solved the problem. Okay, so I'm not sure at what time the sound cut out. What this slide is all about is really the New Zealand experience, showing that the new format is now well established, that we do have variation in practice, in that some auditors are choosing to go beyond the mandatory requirements of the standard and report the outcome of their procedures. That some auditors are including information on materiality, and some auditors are including information on the audit scope. We continue to monitor the uptake of the standards as this new tranche of reporting comes into effect for all FMC reporting entities considered to have a higher level of public accountability. And this will inform information that we send to the international boards as they start to perform a post-implementation review of whether the standards are being consistently applied globally and whether they are achieving the objective that they set out to achieve. So we'll be continuing to monitor the New Zealand experience and feeding that through internationally. Another sort of domestic project that we've leveraged off the changes to the auditor's report is a domestic project that the NZAUASB together with the Australian board has been working on, and an exposure draft is currently open where the New Zealand board is proposing to refresh the interim review report to be more consistent with what's been done in the annual audit report, with a caveat as appropriate for a review engagement. This will largely impact listed entities who voluntarily seek to have their interim review reports reviewed. It does not extend to engagements where the auditor is only engaged to do a review and is never actually engaged to audit the financial statements. So these changes are very much consistent with what you would have seen in the updated audit report. We're reordering the report with the review conclusion first. There's a clear independence statement. There is more information on both management's and the auditor's responsibilities related to going concern. We are consistently labeling information related to a material uncertainty, so it's no longer to be called an emphasis of matter paragraph, and also naming the engagement partner. Importantly, the proposals do not require the reporting of key audit matters for a review, and also is not proposing to require an other information section. The submissions on this close on the 14th of October, and we do encourage you to please consider submitting on these matters. The most sort of controversial is around the description of the going concern responsibilities. Moving to the next topic on the agenda is just a reminder that the board has issued the new domestic audit standard NZAS1, the audit of service performance information. This standard will really impact the not-for-profit sector and the public sector, where there is a requirement for entities to include service performance information within their GPFR. The standard was issued by the New Zealand board in February of this year and will be effective for periods beginning on or after January 2021. This effective date aligns with the effective date of the corresponding accounting standard PBE IFRS 48, which sets the service performance reporting requirements. Early adoption is permitted. For Tier 3 entities, there is already a requirement for entities to report service performance information in their entity's performance report, and auditors can continue to refer to EGAU9 for guidance up until the effective date of NZAS1, or can early adopt NZAS1. The board has also approved a project to develop a review standard, with that project due to commence next year. Without going into too much detail about NZAS1, really the key sort of approach to auditing service performance information can be summarised as a two-step approach. Step 1 requires the auditor to determine whether the service performance to be reported and the way in which the entity wishes to measure or describe that performance is suitable. So really what this is looking at, for example, a charity may be reporting on the number of meals it's prepared, or it might choose to report the results of a sort of beneficiary survey where it's gone out and sought feedback as to the beneficiary's experience in dealing with this organisation. And there is a lot of judgment to be applied by the preparer to determine what and how to disclose and measure and evaluate its performance. And this increases the risk of preparer bias. So the audit has a very important role to play to check whether that the way and how an entity selects to report its service performance is relevant, complete, reliable, neutral, and understandable. Now, those 5 characteristics need to be balanced off against each other, but that's what step 1 is all about. And there's lots of guidance in NZAS1 as to how the auditor would go about doing that. Step 2 is then to audit that information. So to go behind, make sure that there's systems in place to collect robust data and then to verify that information. I'll now pass back to Sharon, who will take you through accounting estimates.
Sorry, everyone, had to unmute my microphone there. Thank you, Misha. So ISA NZ 540 revised, auditing accounting estimates, including fair value accounting estimates and related disclosures, was issued in November 2018 and is effective for periods beginning on or after 15 December 2019. The IAASB Implementation Working Group has prepared a variety of non-authoritative guidance to assist auditors to apply the standard, and these are available on the IAASB website. Next slide, please, Misha. Okay, so revisions to ISA 540 were necessary to address public interest issues. These included the evolving audit risks relating to accounting estimates due to a more complex audit environment, addressing audit quality for accounting estimates, and in fostering improved exercise of professional skepticism, and realising public interest benefits through communication and transparency. In revising ISA 540, several significant enhancements were made. So firstly, recognising the spectrum of inherent risk, building on the concepts in ISA 200, 315 and 330 to drive scalability. Under the spectrum of inherent risk concept, the assessment of inherent risk depends on the degree to which the inherent risk factors affect the likelihood or magnitude of misstatement and varies on a scale. Introducing the concept of inherent risk factors. Inherent risk factors are characteristics of conditions and events that may affect the susceptibility of an assertion to misstatement before consideration of controls. The inherent risk factors include estimation uncertainty, complexity, subjectivity, as well as other inherent risk factors, and these other inherent risk factors are described in the standard. Enhancing the risk assessment procedures relating to obtaining an understanding of the entity and its environment, including the entity's internal control. The auditor's understanding of matters related to the entity's accounting estimates has been enhanced to drive consistency and to be more specific to address the auditing challenges in an increasingly complex business environment and increased complexity in financial reporting frameworks. Separating the assessment of inherent risk and control risk. The separate assessment of inherent and control risk for accounting estimates seeks to move away from using a threshold of low inherent risk and towards emphasising the spectrum of inherent risk. Emphasising the importance of the auditor's decisions about controls relating to accounting estimates by highlighting relevant requirements in ISAs 315 and 330. Introducing objectives-based work effort requirements directed to methods, including specifically when complex modelling is involved and assumptions in data, to design and perform further audit procedures to respond to assessed risks of material misstatement. Enhancing the stand-back requirement by adding the evaluation of the audit evidence obtained regarding the accounting estimates, including both corroborative and contradictory audit evidence. Enhancing the disclosure requirements to obtain audit evidence about whether the disclosures are reasonable. Adding a new requirement to consider matters regarding accounting estimates when communicating with those charged with governance, and expanding the documentation requirement. There's also new and enhanced application material, and conforming and consequential amendments with respect to external information sources have been made to the definitions, requirements, and application material in ISA NZ 500. Next slide, please, Michelle. ISA 540 enhances the auditor's exercise of professional skepticism through a requirement to design and perform audit procedures in a manner that is not biased towards obtaining evidence that may be corroborative or excluding evidence that may be contradictory. Requirement to stand back and evaluate the audit evidence obtained. Focusing on management bias in the risk assessment and work effort. And the use of stronger language in the application material, for example, challenge, question, reconsider, to reinforce the importance of exercising professional skepticism. Next slide, please. Okay, I'm now passing you back to one of my colleagues to carry on. Thank you, everyone.
Thanks, Sharon. It's Payman here. Hello, everyone. I'm going to provide a quick overview of the proposed changes to the IAS 3115 with the title Identifying and Assessing the Risk of Material Misstatement through Understanding the Entity and its Environment. But first, a little bit of background. In July 2018, the International Auditing and Assurance Standards Board released its exposure draft, including proposed changes to the IAS 315 to receive comments from stakeholders. The IASB considered and received feedback from its constituents in March 2019 and decided that further changes to the AD are required before it can be finalized, especially changes to address concerns in relation to the length, complexity, and the scalability of the standard. Since March 2019, the task force overseeing this project progressed changes to the AD by focusing its efforts on implementing the new drafting approach. The new drafting approach classifies the content of the proposed standard into the following 4 categories. What the auditor is required to do, definitions that describes the meaning of a specific words or terms used within the standards, including common characteristics which support the application of the requirements, why the auditor is required to perform the required procedures, and finally, how the requirements should be applied. In short, what the drafting approach meant was that it retained the what in the requirement section of the standard, thus keeping it at a principal level. The additional material or criteria were moved to the definition part of this standard. With the exception of few whys that are kept within the requirement section of the standard, the task force has moved the why and the how from the majority of the requirements to the application material, appendices, or guidance. The IASB is due to consider the updated ED as proposed by the task force in its September meeting, which is actually in this week. If the IASB is happy with the revised ED, the IASB is likely to approve the standard in the next meeting in December. The standard will be applicable 18 months after approval. Next slide, please. Today, we do not have enough time to go over all proposed changes in the ED, which are quite extensive. Instead, we quickly go over some of the more important parts of the proposed changes. One key area of proposed changes is the system of internal controls and what auditors are expected to do in relation to these controls. There are few new definitions, and also a couple of the existing definitions are revised. In particular, these definitions relate to when auditors obtaining an understanding of an entity's system of internal controls. So the new ones that you can see on the left-hand side are application controls, general IT controls, and IT environment. These are actually lifted out of glossary and updated by the task force. The new standard maintains the 5-component model of a system of internal controls, which is enhanced to better align with the updated version of the codes of frameworks. Also, the definition of controls is updated to emphasize that sometimes controls are there, but may exist in a less formalized form and may not be written down as a formal policy procedure, but you can observe these controls operating, and therefore they do exist. The task force believes that there is particularly important for scalability. The ED objective is to try to clarify why and when auditors are required to determine the design of controls. So you only have to do that when you identify controls relevant to audit. And when you identify relevant controls, then you have to evaluate their design and ensure their implementation. Next slide, please. Another key area is the framework for identifying and assessing risk of material misstatements. Again, there are few new concepts and requirements in this area. One new concept is inherent risk factor. It may worth noting that, as Sharon just explained to you, the IS 540 actually uses some of these inherent risk factors in its draft. But the main objective of introduction of inherent risk factor is to help auditors in evaluating identified inherent risks. So as you can see, there are 5 key inherent risk factors that are shown in the right-hand side of the table under the inherent risk factor heading. One of these inherent risk factors is susceptibility to misstatement due to fraud. Including fraud in the definition of inherent risk factor continues to have divided views, and the task force is still working on this particular inherent risk factor, trying to improve the definition. There are also new definitions that are namely relevant assertion and significant classes of transaction account balances. Again, probably they have been taken out of glossary and added to the standard. There's also a change. This is important change to how auditors perform the risk assessments. You no longer can perform a combined risk assessment. You now need to perform a separate risk assessment for inherent risk and control risk. So this is because some auditors in the past have taken credit for reducing in a combined risk assessment when they actually didn't test operating effectiveness of controls. Also, another introduced concept is a spectrum of inherent risk. But while this may be new to the standard, I think many of auditors have been using this spectrum in practice, so it shouldn't be a surprise to the auditor. Next slide, please. Another key revision to the definitions in the 315 is the significant risk. The original released ED, which was released last year, defined significant risk as for which the assessment of inherent risk is close to the upper end of the spectrum of inherent risk due to the degree to which one or a combination of the inherent risk factors affect the likelihood of a misstatement occurring, or the magnitude of potential misstatement should that misstatement occur. So it's actually quite lengthy and wordy, but the important part is that it's likelihood of something happening or the magnitude. And the B, which basically says if other standards require a risk to be significant. There are 2 examples of that in the ISAE suite, and is risk of fraud in revenue recognition, and significant related party transaction outside the normal course of business. But on the A part, which says or, likelihood or magnitude, there has been a very strong pushback from the stakeholder in their responses to the ED to the IASB. So the new proposed definition of significant risk is based on the combined assessment of likelihood of an inherent risk happening and its magnitude. So instead of likelihood or magnitude, a significant risk is now proposed to be determined by considering likelihood and magnitude. And this will be those risks that are plotted in the top right-hand area of diagram shown in the left downside of the diagram. Next slide, please. Next slide, please. This slide is finally, this is a slide just to show and demonstrate how that separate risk assessment requirement actually will work in practice. So for inherent risk, which is shown on the left-hand side, the auditor needs to do that in two steps. They first need to identify the inherent risk at a certain level before considering any controls, so as if there's no control. At this stage, you need to take an educated guess using your professional judgment to identify the risk of material misstatements. Once you identify the risk of material misstatements, then you have to evaluate those risk of material misstatements based on the likelihood of occurrence and magnitude using those inherent risk factors that we have already discussed. The right-hand side shows what you need to do in relation to control risk. So please note that unlike inherent risk, auditors do not identify control risks. This is because auditors are only required to focus on controls relevant to audit. Therefore, instead of identifying control risk, the auditor first identifies controls relevant to audit. Then they need to evaluate the design of these relevant controls and confirm that they are implemented as designed. Also, unlike inherent risk that does not have a predetermined level, control risk for controls relevant to audit are defaulted at maximum. So auditors can only lower the control risk where they intend to test control for operating effectiveness. So when you do not intend to test controls for operating effectiveness, for example, because you have selected a fully substantive approach, control risk remains at the default maximum level. And finally, as you can see, the risk, audit risk is simply a product of inherent risk factor and control risk factor, which is not new. So I think I need to pass the microphone back to my colleague, Misha.
Right, thanks, Pavan. Hope everyone can hear me now. The next topic for our agenda is the proposed quality management standards. The International Board has proposed a raft of changes to the current quality control standards. The ED has been, sorry, just checking, can everybody hear me? Please raise your hand if you cannot. Okay, it sounds like everybody can hear me. That's good, just checking. Okay, so the ED has been exposed in New Zealand and the submission period has closed. The IAASB is discussing the feedback that it's received. It received almost 100 submissions globally on this raft of proposals, and it will reflect on the feedback received this week. The proposals affect quality control, and basically the driver for this project was as a result of issues found in inspection findings, also as part of the post-implementation review of the clarified auditing standards. And really the aim of the project is to encourage firms to take a proactive response to quality management. Another key part is to address the scalability of the standard. The key to understanding the proposals is really in the change in the name. So it's no longer going to be quality control standards, but it's going to be quality management standards. There's 3 proposed standards in this package. One is ISQM 1, which is quality management at a firm level. A new standard, ISQM 2, which is looking at addressing engagement quality reviews. So this is the old EQCR. It's now been moved into a separate standard as it doesn't apply to all engagements necessarily. And then also looking at ISA 220, which is the management of control, the management of quality at the audit engagement level. So the purpose of this session is just really to step you through the ISQM 1 proposals at a very high level with a focus on the new quality management approach. The proposals cover 8 components. Some of these components are based on the current quality control approach. So you sort of look at this house on the slide. There's eight components in the whole structure, but there's some similar building blocks in this house as to what's in our current approach. So it's got a new roof, a new focus on governance and leadership. So that's new. Well, it's not completely new. It's adapted from the current governance approach, but has a much higher emphasis and importance given and focus in the proposals. The relevant ethical requirements, acceptance and continuance, and engagement performance are very similar to the approach under the current quality control approach. The resources component has been expanded to not only focus on human resources, but most importantly expanded to take into account technological resources. And then this is a new component dealing with information and communication. The elements within the house are sort of the what to manage. And then there's 2 processes that wrap around the what to manage and sort of focus on the how to go about managing that. And this is a new requirement for a firm to have a risk assessment process. And we'll look at that on the next slide. There's also the monitoring and remediation requirement. Those have been adapted from the current standard. The proposed approach is to require firms to apply a risk assessment process, and that's really key to driving this proactive response to managing quality. Firms are going to be required to apply this risk assessment process to all the other components within the house. The proposals originally looked to apply the risk assessment process also to monitoring and remediation, but the feedback that the IAASB's received suggests that potentially the board may need to reconsider whether it's actually appropriate to apply this risk assessment process to the monitoring and remediation process. So we'll have to wait and see where the board lands on that. But the risk assessment process, there is generally a lot of support for that approach, and the approach is sort of has 3 steps involved. Step 1 is to establish quality objectives. The exposure draft proposed to include rather granular quality objectives, which are outcomes based for each component within the quality management system. And also noted that additional quality objectives are required when the objective is necessary to achieve the objective of the quality management standard. Indicative feedback, like I said, is supportive of this, establishing the objectives, but strongly urge the IAASB to consider lifting the objectives higher. The really granular approach in the proposals seem to have a mixture of a risk-based and a prescriptive rules-based approach. So really the feedback seems to encourage the IAASB to lift it higher to achieve the benefits of a true risk-based approach. So let's wait and see where they get on that. Step 2 in the process requires the firm to identify conditions, events, circumstances, actions or inactions that could adversely affect these objectives. This step 2 is key to addressing scalability because the risks that the firm identifies will differ really according to the nature, circumstances of the firm, as well as the types of engagements that it undertakes. So this is really a big factor. So the risks are not going to be the same, for example, for a Big Four that's doing global listed audits versus a sort of sole practitioner that's doing reviews for smaller charities. The risks are different, and to achieve a scalable standard, this step 2 is key to try to achieve that. The exposure draft did not include any specific risks, rather left that for the firm to identify. Feedback indicates that many stakeholders would encourage the IAASB to provide more guidance on this need to identify and assess risks. And so the IAASB is discussing a possibility of including risk factors to consider. So just like Payman was discussing in 315, a risk-based approach, the ED also proposed a 2-step process in terms of identifying and assessing risk. The first step being to identify the quality risk, and then the second step to assess the quality risk. The exposure draft definitely acknowledges that it's not possible to respond to every possible risk. Rather, it requires the firm to consider the reasonable possibility of the risk occurring and the significance of the effect of that risk on the objective of the quality management system. So the exposure draft did have a 2-step sort of process, and indicative feedback is that could potentially be streamlined and simplified by combining the steps to identify and assess, but still very importantly to have this reasonable possibility as well as the significance of the effect. So very similar to the graph that Payman was showing you in terms of the risk approach, it will be around determining the threshold for when you need to respond to an identified and assessed risk. There is support for or urging of the International Board to provide clarity around the level or the threshold for when a firm is required to respond to a risk. And the guidance there is likely to focus around the reasonable possibility as well as the significance of the effect. The third step in this risk assessment process is to design and implement responses to the risks identified. The exposure draft did include some required responses that all firms would be required to design and implement, but are not a complete set of responses. Rather, the proposals would require firms to design and implement additional responses as identified by their own firm, appropriate to their circumstances, and also to adapt the required responses to their circumstances. The responses in the proposals were not linked to the objectives or to risks, but there would be a requirement for the responses to be linked to the risk that it was responding to. And a significant concern raised from the feedback to the IAASB is around how this sort of map, as indicated in the bottom left of this slide, would all be documented, and this sort of spider web of risk, of objective risk and responses could become very complicated to document, given that a response could be responding to multiple risks, responding to multiple objectives. So that's really a high-level whirlwind tour of the new quality management standards. I'm not going to go through ISQM 2 or 220, but we will keep you informed as to how these developments play out, and the New Zealand Assurance Standards Board will be looking to issue a New Zealand equivalent exposure draft in due course. I'll pass you over back to Payman now.
Hello again. Thank you, Misha. I now will talk about the International Auditing Standards Board discussion paper, Audits of Less Complex Entities, exploring possible options to address the challenges in applying the ISAs. So the discussion paper was released in April 2019, and comments were actually closed on 12th of September 2019. And the ISB is trying to address, global call to address issues of complexity, length, and understandability, scalability, and proportionality in relation to using the ISAs. So to help the discussion, they've issued this discussion paper, and the discussion paper, as some of you might have actually had a chance to look at, has 4 topics included. And so these are: what is a less complex entity? The factors that may adversely affect the scalability of the ISA that are outside the sphere of power of the IESB, or they have decided to exclude it out of this project, which we will not discuss in the today presentation in favor of time. Factors that adversely affect the scalability of the ISAs that are within the scope of the project, and finally, the possible ways forward. Next slide, please. So the first topic is, what is a less complex entity? So the ISB originally tried to help the scalability of the standard by introducing the concept of specific application materials for smaller entities. And all of you must have seen this in the existing suite of the standards. But the discussion papers explains that the ISB doesn't believe that the size of an engagement is actually a good proxy for its complexity. You can have large and simple entities, and you can have small but complicated to audit. So instead of using smaller entities, the ISB now proposing to use less complex entities to move this discussion forward. But the definition that they have used in the discussion paper is the existing smaller entities. Basically, it's the most convenient way of starting the conversation. Otherwise, they needed to come up with a new, unfamiliar definition. And that definition just introduces certain qualitative characteristics. Among those, one of the key ones is that there's no separation between management and those charged with governance, like a very owner-managed entity or company. And also simple and straightforward transaction, simple record keeping, and few internal controls. Next slide. So at this stage, is just trying to identify, the ISB is trying to identify the root causes for the scalability and proportionality issues. So they have identified a range of underlying factors and classified them into various categories. But in terms of what affects their standards, they have identified that it's possible that the language and basic approach, if the existing standard has resulted in less clarity and more lengthy standard, which is a bit ironic because the project that ran the changes was called Clarity Project. So another challenge is documentation. That auditors report the documentation is a very big part of the scalability challenge. Lack of clarity of what needs to be documented and the extent of such documentation. The requirement can be unclear of what is expected, and is not clear how they may apply to audit of less complex entities. And finally, there are not enough guidance with the ISA for applying the ISAs. This is particularly challenging because more guidance means longer standards. And finally, the standard identify some standards that are actually very difficult to implement from a scalability perspective. So these include responsibility for considering fraud, risk assessment and understanding the client and environment, especially requirements around internal controls, accounting estimates, and we basically did a quite good outreach to form our feedback to the ISB, and we actually have identified similar trends and concerns in New Zealand. Next slide, please. So within the discussion paper, the ISB says at this stage they haven't chosen a real solution, but their thoughts for solutions, they've categorized them into 3 possible actions. So they basically say, one is to revise the existing standards, the other is to develop separate standards, and finally the guidance. So they are not mutually exclusive, and a final solution may include elements of all. But about the revising, they think if they revise the standard, it should provide more clarity of what auditors need to do and how to do it. And the proposed approach is to start with the most important requirements that are applicable in most circumstances, and then build up from there to address increasing complexity. So basically building from simple to complex, as opposed to requirements as if every engagement is the same. This could improve revising all the standards. If this involves revising all the standards, it can be a very large project. And given that ISB agenda is already full for the next few years, it's very unlikely to happen. But the alternative is to use this approach to revise the standards that are basically being reviewed at the moment, like example ISAE 3115. And this provides an opportunity for you guys to see if this is actually a practical solution. Another approach that is recommended or considered is developing a separate standard. A lot of work has been done on this by the Nordic countries, like Sweden, Norway, and some other countries like Belgium and Sri Lanka. They also have come up with separate auditing standards for very specific situations. Separate auditing standards can be based on the same principles, risk approach framework, or they can be on a completely different framework, but the ISB at this stage hasn't specified anything, and they're just basically exploring ideas. And finally, an option can be developing guidance or more help. So the ISB will actually consider the feedback they've received from their stakeholder around the globe, and will consider that feedback, and hopefully we shortly know what is the next step in this project. Next slide, thanks. So before we wrap up, I think next slide, there's another topic I would want to touch on, is that, as you're aware, auditors who modify the opinions when they're auditing a company or an FMC reporting entity need to send a copy of that modified audit report to us at the XRB, as well as FMA and the company's office. So we are trying to streamline that, and so we have recently upgraded how you can send these reports to us. So we recommend that you go to our website under assurance standard, there's modified audit report, and if you go there, that should be self-explanatory. But I want to use this opportunity to remind you that while we envisage that in future this will be a one-stop, so you can send this report in one go, this is yet to happen. So you still need to send the reports to all 3 organizations individually. But hopefully, if this works, in due time, this will be the only place that you need to submit your reports to meet your reporting obligations. Thank you. So I think I go back to Misha to see if there are any questions for the wrap-up session.
Yeah, so that's just a quick review of what we've covered today. I don't see any questions in the being raised in the commentary, but if you do have any questions, please feel free to email one or all of us on the team, and we will endeavour to get back to you as soon as possible. But otherwise, on behalf of the XRB, I'd like to take the opportunity to thank you all for your participation today, and we hope you will look out for further assurance webinars to keep you updated. So thanks for your time. Have a good afternoon.